Hello friends, welcome to another Stock Valley video. In this video, we're going to talk about supermicrocomputer stock. Our ticker symbol is SMCI. Now, if you'd like, let's start by talking about why this stock has been rising like this. As you know, in these videos, we first ask our questions, and then we explain the reasons behind them. That way, these videos become educational for you at the same time. You also get to see how logical answers can lead to better analysis. Now, when we look at SMCI stock honestly, we can see that the stock had been moving inside a major sideways channel for quite a while. We had certain support and resistance levels here, and the stock was clearly reacting around these zones. When we look at the past movements, we can see that the price action has generally respected these levels. Looking at the weekly chart, on March 16th, we had already formed a bottom in the stock. From there, we got a rebound move and reached the 200-week moving average last week. This week, we are trying to continue that rebound move. Right now, it looks like some profit taking has come in. Today, we already have around a 2.7% pullback. I already drew the critical historical levels for you on the chart. If this rebound continues, there is a chance that we could rise toward the $62 level. Before that, however, the first major level we need to break is the $39.40 resistance zone. Previously, on November 14, 2024, we received support from the $20 region, after spending 1 or 2 weeks between $25 and $28. The stock opened with a gap up last week and is currently trying to break above the 200-day moving average. On the weekly chart, we are also trying to move above the 200-week moving average. What are the important support and resistance levels? As you can see, I already shared them on the chart. Around the $16.75 to $20 region, we had our major support zone. This support worked very well. In fact, I even marked it as a support area on the chart. That support held nicely, which is a good sign. Because of that, we may potentially see the stock move toward the $39.40 level this week. So, what could be the next targets for the stock after this? As I mentioned earlier, hopefully we can test the $39.50 region this week. After that, profit taking may come again, because we also have another support and resistance region around $35. In fact, based on today's movement, it looks like the stock already touched that area. When we look at the early chart, the 50-hour moving average is currently acting as support for us. If the $35.70 level is broken, then the next target above is $39.40. From the current position, that would already represent around a 10 to 15% profit potential. If the $39 level is broken, then after looking again at the daily chart, we will probably start seeing another reaction move higher. The next resistance area would be around $48.56, and above that we have the $62 region. For now, following these targets should be enough for us. So, is there any major risk left in this stock right now? Honestly, in the short term, it looks like most of the risk is gone, because we formed a double bottom pattern, and now the stock is trying to break above $35. If it succeeds, then the road upward could open significantly. Now let's come to the best question of these videos. What would I personally do in this stock? Let me quickly share that with you. The buying zone we identified is between $28.86 and roughly the $35-$45 range. Right now, we are trying to break above the 200-week moving average. If another wave of selling comes in and the stock drops back toward $28.86, I would personally start buying from those levels. If the stock enters another sideways movement here, then this entire region would become my accumulation zone, assuming my average cost becomes around $31.32. I would expect the stock to eventually rise towards $62. That could potentially provide around an 80 to 90% return. That is the first scenario. The second scenario is this: if I start accumulating shares and the stock drops further, I personally would not consider stopping out below $28.86, because as you can see, The stock already received support twice from the $16-20 region. If we revisit that area again, we could potentially get another strong reaction bounce. So what could be done? If the stock starts falling and I continue accumulating within this range, by the time it reaches $20, my average cost would likely come down toward the $25 level. Then, if we get another upward reaction move toward $35, I would probably sell there instead of waiting for a break above the 200-week moving average. Even that move could still provide a 40 to 50% gain. That's the second possible strategy. The key thing here is whether the stock can achieve a weekly close above the $35.70 level by Friday. That is what we need to monitor first. Because if the stock moves above that level decisively, it could rally very aggressively. When we examine past movements, we can see that previous rallies delivered gains of 132% and 114%. So historically, the stock has shown the ability to produce very strong returns. But the important thing is this: the stock needs to stay above the 200-week moving average. Right now, we only moved above it last week, and this week we are trying to hold above it. If you watched until this point, thank you very much. And if you'd like to support us and see more videos like this, you can subscribe to the channel and like the video. Wishing you all great profits.